Got a new topic for today.
New topic for today.
Okay, the energy. What's my
G.
name?
That's Maria Castaneda. You keep acting like that.
This is Travis Eman, broker at the Salerno Realty team.
Good.
And mortgage agent at Cognitive Capital.
2 for 2, but you can't introduce yourself. And
No,
this is Maria
you have to
Eman,
introduce-
mortgage agent with Cognitive Capital Inc. Powered by Mortgage Outlet.
CCI.
CCI? We're going to talk about this article that came out yesterday, and it is regarding
Yesterday or like 2 days ago?
interest rates. I know everyone's talking about them.
So
it's the
boring.
hot topic of the day. Interest
Hot,
rates.
boring topic.
Yeah, as you can see, we're fired up about this. A lot of people are talking about them because in the last month to 2 months, they've already raised 3 times, and they're predicted to raise, or is it 2 times or 3 times? They've raised a couple times, and they're set to raise
so
a
much.
few more times by the end of the year, bringing us probably to pre-pandemic rates.
Unfortunately. So we wanted to touch base on this particular article that pretty much highlights what's going to happen with these hiking interest rates. So should I talk while you're drinking? It's so rude. Guy drinks like a camel. Is that how camels drink?
Camels drink with their throat.
What? I wanted to touch base this particular article that got released, and it talks about how the stress test is going to change.
Now, for people who don't know, the stress test was implemented to help with borrowers when it comes to people taking out these big loans back in 2017. A lot of people were taking out loans for houses. Bidding wars were causing houses to go way above asking. And when the market kind of corrected, some people were kind of shit out of luck, if I'm being honest. So they implemented the stress test. And what
In
it
2018.
and what it basically does is whatever you could qualify for based on the current rates, you also had to be able to qualify for that same rate if they added 2% on. So if you were qualifying for a rate at 3.2%, you would also have to qualify for that rate at 5.2%.
They just want to make sure you can handle if ever the interest rates were to ever go up. So overall, these rates have been at an all-time low ever since the pandemic hit.
The government pretty much had to do this because people weren't working, and they had to give some kind of incentive for people to buy and sell homes, or else, the market would tank completely.
Even as we are right now, the rates are still
They're
low
extremely
in the
low. Let's
grand
be
scheme
real.
of things. Like, we have parents who
Talk
had
about
to
in
do,
the 80s when
yeah,
mortgage rates were 20 to 28%,
yeah.
and like people weren't talking about, oh, when I sell, how much money am I going to be left with? They were talking about how much money am I going to be losing.
Exactly.
So we're very fortunate to still be around that 3 to 5% range, and we've just been spoiled in the last 2 years.
Exactly. So still take advantage of that. So as it stands right now, most borrowers are still locking in rates at about 3.25%.
So at that rate, the stress test would add another 2 points, which would then make people have to qualify for that 5.25% as well.
So usually you would get tested against the Bank of Canada's mortgage qualifying rate at 5.25%. But let's say, for example, you got locked in at 3.75, then you would still have to qualify at 5.75%. So, Mr. Realtor, what does this mean about housing affordability for us?
So as the rates go up, this basically is going to limit the amount of buying power that purchasers have, because if the rate goes up to 4%, which it probably will, that means that person's going to have to qualify for also 6%, which is dropping the affordability, the purchasing power for that buyer.
So pretty much you can expect more of this to come because 5-year fixed rates are starting to march high.
As we said already, it's already been raised a few times, and they're expecting it to go at least 2 to 3 more times until the end.
I think it's going to be like 4% pretty soon.
Yeah. So basically, if it's 4%, you're going to have to qualify for 6% as well, which is a hefty difference when you look at a mortgage. So
exactly.
Be aware of that.
Exactly. So our advice is to gather your finances and analyze it well.
Talk to a mortgage agent, start getting a plan in place, and remember, only buy something that you can afford, especially in these crazy times.
Yeah, make sure you can repay your mortgage, guys. You don't want to go house poor, you still want to be able to live. And if you are especially worried about locking in at a variable rate, You could always, just so you have peace of mind, you could always lock in at a fixed rate.
This might also be a good time if you are in the market for refinancing. You can lock in a lower rate at this time before things get a little bit higher if you are renewing in the next few years.
Yeah, just consider paying the penalty now rather than risking it, if of course that's your choice.
With all that being said though, guys, don't panic. As we said before, rates are gonna go up, but they kind of have to due to inflation. Prices are getting out of hand in our city.
They have to control it somehow.
At the same time though, it's a demand issue, and it's always going to be a demand issue for now until there is enough houses. We've seen articles where Canada is going to be bringing in millions of immigrants, so those people are all going to be migrating to two places, Vancouver and Toronto for the most part. So those areas are going to continue to be high in demand for housing, and we're going to continue to see price growth, but the last 3 months have been tomfoolery, to say the least. So obviously they're doing this because we need to reel that in a little bit, but still expect prices to grow in this area, and don't wait for the market to crash because you're going to be waiting for a long time.
And don't stress out about the stress test. Everyone freaked out about it in 2018, bars, right?
Bars.
Everyone freaked out about it in 2018, and it all turned out to be fine. So you guys can do it. And if you ever need advice or help, hit us up.
Hit us up. Hit them
I think
up.
I wore my thing backwards.
Probably. Well, I'm Travis, broker here with the Salerno Realty team and mortgage agent with Cognitive Capital.
And I'm Maria Eman, mortgage agent at Cognitive Capital.
Guys, thank you so much for watching these videos. I know they suck, blah, blah, blah.
So
Make sure you
boring,
hit
man.
the like button.
Car just committed suicide.
It's this side, the ping, and make sure that you always punch that
This thing is
subscribe
exhausting.
button.
Thanks, guys.